Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode number 19 on July 21st, 2018. I'm your host, Eric. And in this week's show, we're going to cover the trades from last week on Advanced Micro Devices, eBay, and ConoccoPhillips. And we also will discuss 3 new trades on Macy's, U.S. Steel, and Hertz Rental Car. If you have any questions about the podcast or need some help with an options position, feel free to email me at Eric, that's ERIC, at theweeklyoption.com. I'm always happy to hear from listeners and to take phone calls or emails to help out with option positions because it's something I love talking about. So this past week, actually yesterday, Friday, July 20th, was options expiration for the month of July. As of Monday, the front month is officially August, and August expiration is Friday, August 17th. So that's the 17th of August, roughly 4 weeks from now. So this week, the market finished relatively unchanged. The Dow Jones Industrial Average was 38 points higher than it was last week, ending the week at 25,058 points. And the S&P 500 index finished half a point higher at 2,801.83 points. And this week, nearly 800 companies will announce quarterly earnings. I mean, it's like the whole S&P 500 is this week. So here are a few of the names that I will follow this week. On Monday, we'll hear from Google, TD Ameritrade, and Halliburton. On Tuesday, we'll hear from 3M, Eli Lilly and Company, AT&T, Kimberly-Clark, Verizon, and Texas Instruments. On Wednesday, we'll hear earnings from Coca-Cola, Ford, General Motors, Facebook, Las Vegas Sands, Hilton, Dr. Pepper, Equifax, Qualcomm, PayPal, UPS, and Visa. On Thursday, we'll hear from Amazon, we'll hear from Spirit Airlines, Intel Corporation, Chipotle Mexican Grill, Valero, Comcast, Starbucks, and ConoccoPhillips, along with MasterCard. And then Friday, we'll finish up the week with ExxonMobil, Chevron, Merck & Company, and Twitter. So quite a few companies that I'm even watching this week. Even more, like I said, just shy of 800 will be announcing this week. So there should be a good amount of volatility in the market and some good options out there as well. And oddly enough, I didn't cover any of these companies in this week's trade. So if you see a trade you like or see a trade you'd like me to cover, definitely email it to me and I'll take a look and discuss it with you and maybe even put it in next week's show. So let's take a look at the trades from last week. The covered call trade that we looked at was on Advanced Micro Devices, and that symbol A as in Apple, M as in Mary, D as in David. The stock was trading $16.27, and we sold the August 17 call for 85 cents. So Advanced Micro Devices finished the week at $16.50 per share, a gain of 23 cents on the stock. We sold that August 17 call for 85 cents against the shares of stock. So you could actually buy back the option today for 93 cents. So the option did appreciate. That means a loss of 8 cents on the option, but a gain of 23 cents on the stock. So if you completely close the position out right now, you would be 15 cents per share higher. You know, an option is worth or it's valued based on 100 shares of stock. So essentially this position made you $15 over the last week. Of course, our actual goal in this trade is to make 9.71% over the next 4 weeks. So because we're still, higher than our break-even point, I would definitely look at staying in this trade. No changes needed, so it's working as planned. Let's ride it out. Our second spread was the credit spread last week. We looked at eBay, symbol Edward, E as in Edward, B as in Berry, A as in Apple, Y as in yellow. Stock was trading for $37.61, and we were looking at selling the July 38.5 39 call spread, which was out of the money. So last week when we put this credit spread on, it was a bit risky given the time frame. July options. This trade only had 1 week to work. So selling that call spread, we hoped to gain on a drop in eBay prices. Well, eBay did not let us down at all. The stock fell $3.41 this week, finishing the week at $34.20. That means that our July 38.5 39 call spread ended the month out of the money, which means we get to keep the 14 cents per spread that we collected when we sold the spread. So hey, that was a pretty good trade. And our last trade from last week that we took a look at was a debit spread. Now, we looked at ConoccoPhillips, which at the time was trading for $72, and we were going to buy the July 71.5 call spread for 36 cents, right? Now, this again was a risky trade given that you only have 1 week to make your money on it. This one did not work out on our behalf, or actually it kind of did, but I'll explain that later on. The market fell pretty quickly on Monday, and that's what I mean. I didn't even get to participate in this one because the market fell so quickly. It became clear paying for this spread wasn't going to work out, and that's good because the stock finished the week at $70.01 per share. So essentially, it fell $2 week over week. And that 71.5 call spread that we would have paid 36 cents for would have been an immediate loss of 36 cents. So I never had a chance to execute this spread, but I wanted to still cover it on the call nonetheless because my idea would have taken a loss. Now, like you'll see in the spreads that we look at today, typically you don't lose all of the value in 1 week. But because options either finish in the money or out of the money, when you put on a 1 week trade, and by 1 week trade I mean when you put on an option trade that only has 1 week left until expiration, just like this one would have, you don't have any time to make an adjustment if the stock moves against you. So if it works, that's great, but when it doesn't work, it really kind of sucks because you just watch your money evaporate. Thankfully, like I said, the market didn't let me get into this one, but I've certainly taken a couple of losses, in previous months on these short-term debit spreads, and that's why, as well, part of risk management it's not just choosing a trade that's going to work, right? It's not just saying, hey, the market's going up, so I'm going to buy. Part of it is allocating the right amount of capital to a trade that is going to either be higher or lower in risk, right? So always adjust the size of your trade by the amount of risk you're willing to take. So if I had put this thing on, I only would have put on maybe a one spread, maybe two spreads, because I knew that there was a strong likelihood of losing the money. But I also like buying in the money spreads and being able to collect the remainder, which would have been 14 cents that we would have gotten to collect on the spread had it worked. So that's it. Let's dive into the trades for this week. So this week's trades were actually a little tougher. Many of the companies that I looked at haven't added their $50 cent strikes yet. They haven't added those 50-cent strikes in August. That will happen as of Monday once August becomes the official front month. So some of the spreads that I would normally look at this week, and pricing them, they were still using $2.50 wide strikes. So that means that say we sell a credit spread for even $1 and collect $1 on it on a 2.5 strike wide spread. That means that you actually are risking $1.50. So on a percentage basis, it's not too different than some of the percentage returns that I look for, but it does actually equate to real dollars. And so, you could lose 50%. 50% of a 50-cent spread is $25 or 25 cents. Sorry to flip back and forth. Or, 50% of a $2.50 wide spread is $1.25 or $125 per spread. So even though we're talking in returns sometimes, it still does come back to the actual dollars. So that being said, and I'm sure many of you know that, especially if you've been listening to the show for a while, but let's take a look at the covered call for this week. So looking at Macy's, symbol M as in Mary. Always love it when some of these stocks have one letter symbols. That's when you know they've been around, forever, literally forever. So Macy's stock finished on Friday at $38.65, and we're looking at selling the August 39 call and collecting $1.94 per share on that. So that's pretty rich. That also is enough to make me have a little bit of concern. I don't fully know why this option is so rich right now, but nearly $2 to sell that call. I'm a sucker for it, so I'll take it. That would equate to roughly a 5.71% return on both the stock gain and on the money that we're going to gain in selling this option. That is a nearly 6% return if Macy's stock finishes higher than $39 per share as of August expiration this month. So our maximum gain would be $2.29, and that's a combination, like I said, of the option premium and the stock appreciation. And that call option for $1.94 actually gives us some cushion on our stock that we would already own as well. So that pushes the break-even point down to $36.71. So as long as Macy's stock finishes higher than $36.71 at the end of August, we will, or as of August 17th, which is August expiration, we will have made money on this trade. So our next spread is the credit spread that we're looking at on U.S. Steel, symbol X as in X-ray. U.S. Steel finished on Friday at $37.13, and it's looking pretty strong. The stock looks like it's going a little bit higher, so I looked at selling the August 35.36 put spread. That's a $1 wide put spread. I'm selling for 35 cents. So my maximum gain is 35 cents. Maximum loss is 65 cents. And our break even on this trade is going to be $35.65. So hopefully we will make our money here and have a happy trade next week to report. All right. Final spread for the recording or for the podcast today is going to be on Hertz Global Holdings, or Hertz, otherwise known as Hertz Rental Car. Symbol H as in Harry, R as in Richard, T as in Thomas, Z as in Zebra. We're looking at a debit spread here. So the stock finished $14.09, and I'm looking at an in-the-money put spread, the August 15-14 put spread, buying this for 65 cents. This is a $1 put spread. It's already 91 cents in the money, and we're going to buy it for 65 cents. So our maximum loss is 65 cents. Our maximum gain, of course, is the 35 cents, so nearly 54% return in 4 weeks. And our break even is going to be $14.35. So right now, the stock is already lower than our break even point on this trade. So this is in the money enough to make me want it. And we'll see what happens. The stock symbol, like I said, the stock has been going lower and kind of treading lower. So hopefully it'll stay on lower than at least $14.35 so that we can collect a nice little return over the next 4 weeks. So that's it for this week's show. Thanks again for listening. If you have any questions, please email me at Eric, that's ERIC, at theweeklyoption.com, or you can always visit the website at www.theweeklyoption.com. We have a contact page where you can fill out a note there, and I will end up receiving it. And also, I'm putting together a beta group for an amazing options training, an option trading course that will include both video and personal coaching. So if you'd like to hear more about that, just email me and I'll share some information with you. So that's it. See you guys on next week's show. Happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.